You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, April 23rd show. I build a network of elite industry professionals every week, sharing their knowledge and expertise to my listeners. If you're hearing my show at a different time or day, you are listening to a broadcast or rebroadcast, but you can call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. In studio right now, Erik Tinglum with Skyline Properties, Trident Realty Group Northwest, and he is my expert on everything that's happening in the South End real estate market. Erik, thank you so much for coming back in studio.
I always enjoy being here, Tina.
And I love giving an update on the South End, being that I work mainly in the Seattle and the Bellevue area, so it's fun to hear what's going on. A little bit about Erik. Erik has 25 years in the industry and president of Trident Realty Group Northwest with a team of 5 agents and in the top 3% in transaction volume in Pierce County. Retired USAF and reserve with over 37 years of service. Thank you, Erik.
My pleasure.
Former high school football coach spanning the last 20 years. 75% of Erik's business is working with both retired vets and active duty military around the Puget Sound area. So, Erik, in starting out my conversation with you today, it's a little frustrating and a little sad that middle class and retirees are getting priced out of the King County market with double-digit price increases. Are you seeing that happen over on the South End as well?
It's just starting. You know, we always have lagged King County. We've always been reactive to what's going on up here.
Which is kind of good because you know what's coming, right?
Well, I guess, unless you want to bail ship before it gets there.
There you go.
No, I was talking to our other guests here today when we were waiting for you, and there were numbers out today, just published today, that prices have increased in King County 17% over the high watermark in 2007. And that came from Realtor.com. Wow. So 17% over the high watermark. That's after the huge devaluation after 2007. So you can imagine what the last 12 months have been. I pulled up stats the other day, and King County has about just slightly under 1 month of inventory as an absorption rate. We're just slightly better at about 1.5, where 6 months ago we were probably 2.8, 2.9.
Yeah.
So we are continually in multiple offer situations now. It's something that, of course, you guys have been dealing with up here for a long time. Yeah.
And so when did the multiple offers really start hitting your market?
Well, curiously, I think it's just now really starting to come to full bloom, and I don't think it's even close to being where it's going to be ultimately.
Yeah, if you're not hitting 20 offers on a property yet.
Actually, today we had one of my team members had an offer on a beautiful home in an area called Rodesco in Puyallup, and $400,000, which down there you put that home in Mill Creek and it's $750.
Yes.
And we came in very strong, and we were above asking price, and yada yada yada, and a full cash offer at about 120% of list came in. Wow. And of course, what are you going to do? It's hard to compete against something like that.
Now, are you guys, because we always have a challenge here in our market with getting VA offers, the veterans loan accepted, which is so unfortunate. But in your arena where you have a lot of veterans, are you having issues with government backed mortgages? Or
absolutely.
There's no difference.
No, there's absolutely no difference. Let me just back up. Pierce County is always going to be, along with Kitsap, with Bangor, we have JBLM. What's hard to believe sometimes, revelatory for many people, is that the largest source of income in Pierce County is not active duty military with McCord and Fort Lewis. It's actually retired, like me, military, and we represent about 2% more. So the preponderance of veterans, on a per capita basis in Pierce County is huge.
So you've got a lot more coming in and making
A lot
VA
more.
offers. Whereas for here, we don't see a lot of them. So when you do, it's hard to compete against all those conventional offers.
So the competition, just to be clear, is called
Okay.
the gentrification of King County.
Yep.
Where the middle class is being pushed out, retirees. I mean, people my age, Boeing employee that bought that Wallingford Ballard home for $57,000 back in 1978 has raised a whole family there, and they're getting ready to retire. They just sold it for $725,000, and they still want to stay in contact with the family and the kids. So Pierce County, Snohomish, Kitsap, some cases on the other side of the mountain makes a very good alternative.
Yeah. So, Erik, more affordable housing and coming with cash and going to the north, south, east, and west King County. Why spend the cash with the historical low interest rates?
Well, that's a matter of fact, your guests and I were having that same
whole
question.
show conversation before I got here.
Actually, I don't know why, and I would almost defer
Me
that
neither.
question to you because if I've got cash, I'm not giving it to putting it into the equity of a home that I'll never see.
Yeah, and I think it is a good question. And when you really look at the cost of the interest rate after the deduction of home ownership, but I think a lot of people are just going in because they want to win the property and win that offer. But no, I don't think it makes any sense to get your cash stuck in a home when you can borrow money at such a low rate. Multiple offers with escalation clauses. You say, and I really like this, if you want to sleep on it, you won't sleep in it. So
that's an amen and a half.
It is.
And unfortunately, you can tell your client those things, but oftentimes until they've been burnt a couple times, they still are listening to Aunt Ruth and their friend, Bob, and then comes reality.
Yes.
And with so little inventory. Matter of fact, I would be interested to see what your guests think in the next part of the show as to why we're not seeing more people step up and sell. It's a seller's market.
Yep.
And yet they're just not going.
So what would one thing that I see, and I hear from my buyers that are, because they come to me to talk about financing when I've worked with them before, sometimes before they talk with a realtor, which is the way you should do it. But and they're afraid. They're afraid of selling their house and not being able to get another one. So I know that's one issue. What other things are you seeing with your sellers and why they're hesitant to put their home on the market when it's such a great time to sell?
Well, you use the word fear.
Yes.
And I think that's spot on. But I think the term fear should be broadened.
Okay.
We're in an election year that's been vitriolic at best. And we take a look at all of the innuendos that have gone back and forth. And, there's a sense that, I think I'm just okay. Now, having said that, our team, this past quarter probably have had 5 multi-generational purchases that were not ethnically driven. Now, historically, we think of multi-generational as being maybe in the Asian community, the Ukrainian community, but we're seeing moms and dads and brothers and sisters, buying homes together. And I think we
saw that when the market crashed.
Exactly.
It's kind of like right back to interesting.
Exactly. Yep.
So, Erik, I was talking with a contractor a couple days ago, and it was an interesting conversation because he was saying that, he's having to turn a lot of jobs down. I think they should embrace their strengths and hire a team so they can get more work. But anyways, that's a whole nother conversation. And he's saying that they're, a lot of their realtor partners, it's getting stressful for them because they have these long-term, long-lasting real estate agent partners, and they can't take these jobs on to get the properties ready to sell for the seller because they're too small of jobs. And what they're doing is they're taking the big jobs of the people that aren't selling, that are putting $100,000 in a remodel or upgrade to their home so they don't have to sell. So we're seeing a lot of people staying and making their home their dream home instead of getting out into the market.
To support that, buy Lowe's and Home Depot.
Okay. Yeah, there you go.
Just take a look at what their stocks have done in the last year. I was listening to that actually on the radio the other day. And the comment was that people are reinvesting in their homes.
Yes.
And actually, when you think about it, that probably makes a lot of sense for a lot of reasons for a long time, as opposed to. But see, here's the challenge, Tina. The dynamics that bring along, that are married to home sales, are still in place.
Oh, of course.
I mean, we had a new baby.
Yes.
Or we just got a baby.
Yes.
Just got a raise.
Yep.
Just got a divorce.
Yep.
Illness. I hate the Northwest. I'm finally going to Arizona.
Yeah.
Those things don't seem to be playing in statistically, perhaps the way they have in the last 15, 20 years.
Yeah. So what are we going to do, Erik? Absorption rate of 1.68 months, you said, total inventory of Pierce County.
Yeah, and matter of fact, that's up even slightly. But, as you know, we would anticipate that as we get closer to May and June, we'd start to see the inventory numbers come up.
Yes.
We simply haven't.
Yeah.
So again, it's going to be a real interesting summer, and our team is working on a regular basis. Matter of fact, we just had a good team meeting today about how to combat some of these particular situations when we're on the buyer side and then when we're on the seller side. Now, remember, on the seller side, we still, in many cases down south, if you're getting a conventional offer, you only have to, obviously appraise for the amount that you're financing.
Yes,
well, when we're still seeing FHA and VA, we're still up against appraisal issues.
So what are you? And that's a question I didn't have that I was going to ask you today. But since we're heading that direction, I'd really like you to share with my our listeners is what's happening, and because I know we've had appraisal issues that are starting to pop up. And here's something I was just talking with an underwriter, and it made a lot of sense, but things that, you really don't think about until you're in that market. A new comp becomes available on the market. So appraisers have to come up with comparables, as you know, but sharing with my listeners to support the value. You've got to have the comps to support the value. Yeah. And a new comp comes up on the market, but, it's 2 weeks into the closing or whatever, and that comparable actually doesn't represent what the market was at the time that offer was accepted 2 weeks ago, because the market's moving so quickly. And I mean, it's up to an appraiser and what they're doing with the value. But it was interesting to hear on, and I thought, wow, the market is moving so quick that. So what dynamics are you seeing with the low appraisals?
Well, we've only really experienced the low appraisals, to be brutally honest with you, and with the VA. Yeah. Now I've had a few that we've come in well above. Yeah. But that's the exception as opposed to the rule. Yeah. Now, having said that, those VA appraisers aren't there to deny home ownership to the veteran who justly deserves
of course not.
that opportunity.
Of course not.
I mean, land of the free because of the brave.
Yeah.
Having said that, though, they can't pull something out of thin air that just isn't there. And there are a lot of different modalities, as you're aware, to come up with a number. Yeah. But if you're in a PUD, a planned unit development, where you have 700 houses, I dare say that you better be able to pull one or two out of that area that's going to support the value, regardless of the overall market and the speed at which it's escalating. And
here's something too, Erik, that I heard that was surprising. I was at the Women's Council of Realtors, have some great speakers that came in, and a few months ago they had Alan Pope, which you've well-known appraiser, and some of the things that he said was really shocking. But one of the things that was shocking, and I had never even thought about, it's kind of like those bad aha moments. And he says, here's the issue that appraisers have with VA or with lower down payments, even like a conventional 5% down payment, when all of the other offers, let's say you've got 10 offers and all the other offers, 9 offers, are all 20, 30% down, and you've got this one VA or this one conventional or FHA, a low down payment loan that comes in, and they're paying a higher price because you would think that buyer might be willing to pay a higher price because they know they're competing against all of these higher down payment. The appraiser says that that's an issue in supporting their value if there's no comparables, or it's hard to comp, because here's what he said, is that buyer is feeling forced to pay more than the home is worth because he's competing against the people that are coming with the larger down payment. And I thought, my gosh, that's just unreal.
Tina, that is so totally true. I mean, I wasn't going to get into that argument because I think it's sometimes confusing for the audience to to do the math that we deal with on a day-to-day basis. But that's the truth. And my argument has been to the appraiser, this is a market. Fair market value is what I'm willing to pay.
Yes.
And if my buyer is qualified, with the new maximums here in King and Pierce County, we can go to $540. If my guy is willing to put in another $35,000, $40,000, $50,000, how dare you suggest to a veteran that he can't do that, he or she cannot do that, and therefore, win that battle.
It's the market value. Market value.
And
the market is more than one person, though.
Absolutely.
Yes.
Absolutely.
I know. And see, this is it's a frustrating thing because I can understand, obviously where the seller and the buyer and the realtor and the lender and the appraiser are coming from. Everybody wants to make the deal work for the most part. The appraiser is on our side, but they've got such challenges out there. And I've had a few low appraisals. I've, been very, fortunate. But there are a lot of buyers in our market that are coming in and saying that they'd be willing to pay $30,000 more than the value comes in at. I mean, there's some crazy stuff going on like that. But it's definitely a dynamic that's hard to deal with through this process. But I don't know how it's going to get better until, things slow down a little bit.
Well, we had a situation not that long ago that was just, talk about a blessing. We had a client through the Wounded Warrior Battalion, the transition battalion, that's 100% disabled PTSD. And the sellers were retired military. And without giving away numbers, we came in less, but he was able to find out that the challenges that this vet, this soldier, had undergone. And in this particular case, he showed deferential treatment. Preferential treatment to my buyer, and I mean, I can't tell you how awesome it was that we were able to secure the home for that vet. That was great. That's great,
Erik. Let's talk about more people looking for buildable property, manufactured homes, land. Can you talk a little bit on that?
Yeah, I think. I just found out that there's actually, and I don't know why I didn't know this, there's a category of homes that people are, and then I went online, it blew me away, that are taking old cans, transportation containers, and they're modifying them into homes, and it's actually financeable. Yeah, I got to hook you up on that one.
Financeable? Who's financing them?
Wait till you see.
Really?
I mean, it just blew me away. But we all of a sudden we've had this flurry of people that are looking for land because, D.R. Horton, Lennar, Richmond, America, I mean, they can only build so fast.
Yeah. Well, you guys have land.
And we have land. So all of a sudden,
we don't have any.
Here in the last 3 weeks, we've got people wanting 2, 4, 5, 7 acres. And, I'm thinking equestrian property, owning horses myself. I'm thinking, no, we just want to hide out. I'm thinking, okay, well, but it's happening with increased frequency. And I think it only makes sense that with the lack of inventory, we're going to see people looking for many kinds of alternative options.
So on a positive side of everything that's happening in our market and what's going on in the South End market, obviously great time for sellers to get their home on the market. Is finding another place and being strategic in that process. Are you seeing contingent offers coming together in your market, or not too much?
Not too much, although we accepted a contingent offer the other day, but ironically it was 10 days. I looked at the contingent property out of Neenamclaw, 1,700 square feet, and there was going to be a bidding war. So I just told my seller, I said, hey, that's going to be under contract in a minute and 30 seconds, and so let's accept it. It was a strong offer. And actually it was a VA offer, but again, coming in with $90,000 in cash. I don't know what that was all about.
Yeah, crazy.
He wasn't listening to me.
Yeah. So listening to you, what advice would you give to your buyers right now, Erik?
Well, again, you mentioned, if you're going to sleep on it, you're not sleeping in it. And if it's good, it's gone.
Yeah.
And so therefore,
be ready to jump out
you
there.
have to be ready, and you have to be fully underwritten. And I'd like you to maybe even talk to that, because if you're not fully underwritten, and by the way, we're including paperwork to corroborate that very fact, that when we submit that offer, we're underwritten.
Yes.
I mean, you might as well have a check.
Yes.
Wheelbarrow with money.
Yep.
We're that good, and we can close fast.
Yes.
That's what
now,
we do.
and a little disclosure on that. Yes, completely underwritten, not just a desktop underwriting review, but also to keep in mind, regardless of completely underwriting, I always tell clients there are 5 critical tips to a pre-approval, and it doesn't matter what lender. If you hear, I won't mention any names, but there's a lender on TV that you're underwritten, you're approved. You look at their pre-approval letter, there's a disclosure right down at the bottom. Everything has to be verified and updated. So it's a sense security. What the industry talks about is just going through a pre-qualification versus a complete pre-approval. But even with an underwriting approval, 5 critical tips are employment, income, liabilities, credit, and assets. So if there's any changes, an example, if you quit your job, you're not going to get a mortgage. I mean, so those things are getting verified. If you say your down payment is coming from a bonus from your employer and the down payment actually comes from a loan that you borrowed from your credit card, you've got an issue. So you have to keep in mind, even though you have a full underwriting approval, every lender, government sets up the guidelines. Lenders can't make up their own rules. Employment, income, liabilities, credit, and assets have to be verified up until closing. So just remember not to make any financial changes without connecting with your lender first to make sure it's not going to affect the pre-approval.
So let me just ask you a brief question.
Yes.
If, in fact, I'm sending you one of my clients,
yes,
and you have gone through that process,
yes,
how much time then do you generally need to close a loan versus not having any of that done, or having, say, half of?
Yeah, good question. It's, you should be able to close a loan in 30 days. I know with all the TRID and stuff, there's some, extra days that could come in there. But, a strong 30-day close, things can close less than that, just causes some, challenges. Underwritten or not underwritten, you can add an extra 10, 15 days to that if you're not going through underwriting, if they're not prepared with all of their documentation. So it's, it just depends on the preparation that the client has in moving forward, providing tax returns, paper trail for their assets, and, all of those things that come in.
Well, one other thing, and I just want to thank you because the couple, 2-3 transactions that we've had of late, your staff does a great job of keeping me informed on how my client's doing.
Yes.
So that as a buyer's agent, our team can intervene on your behalf to help assist that buyer in obtaining those documents or seeing that those documents are transported to you in a timely manner.
Yeah.
So then it's a collaborative effort trying to work with that
Thanks,
individual.
Eric.
So
I appreciate it.
Thank you.
Yeah. And for all you buyers out there, just from the lending advice to you, just remember, we're all in this as a team. Your realtor, your lender, and you as a buyer. We're all aiming for the same goal, which is to close the mortgage and have an easy process. The reality of getting a mortgage is not easy because of the documentation. It's not the lender, it's the government that sets up the rules and how lending is. Thank goodness there have been some changes because we definitely do not want another financial meltdown. So whenever you get frustrated at the fact that you've got to turn in those full tax returns, including all the schedules, or you've got a paper trail that cash to close, just remember it's protecting all of us to make sure that we don't have a crisis like we did last time. So
Amen.
Thank you, Eric, for coming in. I appreciate always having the chance to chat with you and sharing your wealth of information with my listeners.
And thank you, Tina.
Coming up next to the Money Hour, don't miss out on your dream of home ownership because you missed the opportunity available in today's real estate market. Now we're going to switch over to the Seattle, Bellevue, King County area with my experts, Susan Larson and Roberta Stennis with RE/MAX Northwest Realtors right here on 1150 AM KKNW after the short break.